So with this card right here, you can get up to a $10,000 credit line without a credit check, and it is powered and secured by your card. So what does that mean exactly? Let's find out. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start now by subscribing so you don't miss out on any future videos. Yendo is a new company that I recently came across, and I believe that they have a very unique product that I have not seen before. So first off, let's go over what exactly Yendo is. The name itself may seem kind of odd, but if you are a Spanish speaker, then you may recognize it. This actually means going. Actually, I found this name to be very creative since this is a credit card that can help you build credit using your car and get you going in the right direction. Okay, this credit card uses your car. So what does that mean exactly? The way that Yendo works is that they could extend you a credit line in exchange for being a lien holder on your vehicle's title. Now, what you gotta make note of is that this will only work if you have the title on hand and you own your car outright. So if you currently have a lien on your car right now, meaning that you currently have a loan on that car, then unfortunately this will not work for you. But Yendo do plan to accept cars with loans on them in 2023. There are plenty of people out there that own the car outright and they may be in need of cash, want to build credit, or they just want to use that equity from their car to use it towards other things like starting a business, emergency expenses, or things of the sort, then Yendo would be a great option for you. In exchange for being a lien holder on your car's title, you can get access to a credit card with a limit up to $10,000. Your credit limit will depend on the make, model, mileage, and condition of your car and your ability to repay. Yendo is a little bit different from traditional credit cards where there is a variable annual percentage rate. Rather, it has a fixed interest rate, which is pretty rare amongst credit cards. So even with all the news about interest rates going up, Yendo's interest rate won't change. If you were to use your credit wisely and only on standard purchases and pay off the balance in full prior to the payment due date, then you would not have to worry about the interest rate, since you would not have to pay any interest. Now, you may be thinking to yourself, how is this any different from a title loan? Yendo is very different. They are a MasterCard credit card and not a loan. They have a significantly lower rate and it will help you build your credit. A traditional title loan is usually an expensive, short-term loan with few to no credit requirements. But the name of the loan should explain it all, because these loans are secured by your vehicle. While title lenders do not run a credit check when you apply and don't report your payments to the credit bureaus, they do have the right to repossess your vehicle if you default on your title loan. That means that it is important to consider all of your options before deciding to take out a title loan. So generally speaking, title lenders may allow you to borrow anywhere between $100 all the way up to $10,000 or even possibly more, but it often comes with an annual interest rate of over 300%. Needless to say, title loans tend to be more expensive than other alternatives due to the higher risk nature. That's why many states have banned title lenders altogether. It's also important to keep in mind that title loans won't help improve your credit score because they aren't typically reported to the credit bureaus. So on the topic of credit, how does the Yendo credit card actually help you build credit? A great feature of this card is that there are no credit checks to apply, and although there are no credit checks when you apply, Yendo will report your information to the credit bureaus once you are a card holder. At the current moment, they do report to Experian and Equifax with plans to adding TransUnion in 2023. You typically will want to have a card or a credit builder that reports to all three credit bureaus so it can affect all of your credit scores. Whenever you get approved for this credit card will be reported as a revolving line of credit. This means that your credit line, balance, and payments will all be reported, which is a good way to start building your credit, especially if you have no credit or poor credit. So with this type of credit line, you have to be careful about the balances that you have on your credit card. So how is Yendo different from other typical secured credit cards? Typically, secured credit cards require money to be deposited into an open account. That money is known as a security deposit, and your credit limit is equal to the amount of the deposit. Unlike most secured credit cards though, Yendo instead secures your credit card by using the equity in your vehicle. This enables them to extend your credit limits up to $10,000 without checking your credit score or having to deposit cash, which means that they can offer limits that are typically much higher than most secured credit card limits. Now, every time that you open up any credit account, this will have an effect on your average age of accounts. Your average age of accounts only takes 15% of your overall FICO score, so it does not have that big of an impact compared to other factors. The benefits can outweigh the risks as it will add more available credit. The higher the credit limits, this can lower your credit utilization and possibly improve your score. Typically, this process takes a few minutes, so all you would have to do is visit their website or download the app to get started. From there, you would just enter your personal information, share details about the vehicle, and then receive a pre-approval offer within minutes. This information would include your phone number, full legal name, email, mailing address, make and model of your car, and annual income and monthly expenses. One thing to make note of is that the Yendo credit card is only available to these 7 states. Yendo is currently expanding to more states in the upcoming future. Now, once you are pre-approved, you will have to finish your application using the mobile app. This includes validating your vehicle in their system by submitting real-time photos of the vehicle and its title. Yendo accepts cars, light-duty trucks, vans, and SUVs that are 1996 or newer and in working condition. Factors such as vehicle condition and if the vehicle has a clean title will determine the credit limit that you will get. Now, once you are fully approved, you will need to send them the vehicle title via secure mail from their shipping partner, FedEx. They will cover the cost of shipment by providing you a QR code, and all you have to bring is your phone, ID, and your title to the nearest FedEx store, and they will verify and ship your title to Yendo. So once your shipment has been verified, they will issue you a virtual card for access that you can use right away. And then you will get a physical card that will arrive 5 to 7 days later. So far, everything looks pretty good. Now let's discuss the costs and fees that are associated with Yendo. There is a fixed interest rate on purchases. This MasterCard may be an internationally accepted form of payment, but the 3% foreign transaction fee makes it a costly option for overseas travel and any international transactions. I would avoid this card as a travel card. Additionally, cash advances and balance transfers come with additional fees as do late or return payments, similar to other cards. All the reasons to steer clear of these type of transactions unless absolutely necessary. There's also an annual $40 fee, but it is waived for the first year. Now, your minimum payment that is due every single month or whenever, there is a balance that can fluctuate because it will be 5% of your balance when the statement closes or $50, whichever is greater. So for instance, if you made $1,000 in purchases on your credit card during the month, this will come out to be a minimum payment of $50. If you were to pay off the $1,000 balance by the due date, then you won't have to worry about anything since you will not be charged any interest. Keep in mind that if you were to take out cash, you still have to pay interest on that cash balance. Now let's go over some frequently asked questions because I'm pretty sure plenty of you guys will have some since this is a pretty unique credit product. The first one is that what if you missed a payment or if you're unable to make payments? According to Yendo, being a few days late on your payment isn't ideal and it could result in a late fee of $20, but they won't report it to the credit bureaus and simply will just let you know that the account is past due. If you go too far past due or notifying them that you have trouble paying, they will work with you to establish a plan that works for your situation. Since they are the lien holder, they can always exercise their right to recover any outstanding balance, but this is always their last option. Also keep in mind that if you are beyond 30 days past due on any payments, they have the right to report this as a late payment to the credit bureaus. It doesn't matter who the lender is, paying on time is how you build good credit. Being late is something that you should avoid at all costs since it can be very damaging to your credit score. I know that a lot of you guys might be afraid of losing your vehicle, but after speaking to one of the co-founders, I can tell you that they do not want to repossess vehicles. They want to work with you to avoid this from happening, and repossession is their last option. Now, if they have to repossess your vehicle, they will work with you so you can recover it. And if that doesn't work and they have to sell it and the vehicle sells for more than what you owe, Yendo will reimburse you for that difference. Okay, I get that getting your car repoed is not fun for anyone, but I still think it's pretty genuine that they give you a difference even though when the local laws do not require it. The next question is that, what if you need your title back? There could be plenty of reasons on why you want your title back. You may just want to close that account or you just want to sell or trade in your vehicle. So you can get your title back at any time just by paying off your balance and giving them a call to close your account. Once they verify your account balance is zero, they will go ahead and close your account and remove the lien from your title and then release the title back to you. However, it is important to keep in mind that closing a credit account can have an impact on your credit score. This is because closing a credit card reduces your available credit, which can increase your credit utilization ratio if you have balances on other accounts. This can lead to a decrease in your credit score, but if you have a zero to low balances on other accounts and a good payment history, the impact on your credit score may be minimal. Another question that may be floating around in your head is that, will my credit line fluctuate? This is a question I had too, since we all know that vehicles depreciate. In most cases, your credit limit will not change. Yendo values vehicles in such a way as it accounts for a large amount of depreciation. This means that even though your car may slowly depreciate over time, your credit line typically stays stable. Obviously, if your car gets totaled, then this may change things. Typically within the first 5 to 7 years, it is when most of the vehicle depreciation happens. After that, it is at a much slower rate. So to expand on this a little bit further, what if your car gets into an accident or gets damaged? this will lower the value of your vehicle. This is something that Yendo has considered as well. You would never get the full value of your vehicle as a credit limit, so let me give you an example. Let's just say that you have a car that has a wholesale or auction value of $10,000. Yendo would not provide you a credit limit up to $10,000, so they may provide you with just $5,000. Now, this is just my own personal opinion of how they would do things. I don't have all the details about their underwriting, but this would lower their risk in case if anything happens and help your account for any normal depreciation. Another question you may have is, what if you own multiple vehicles? Can you apply with more than one vehicle to increase your credit line or have a larger credit line? So at the current moment, unfortunately, they are only able to link one vehicle at a time, but they are currently working on something that allows you to link multiple vehicles to one account. Now, let's do some comparisons since there is really no other product that is kind of similar to this that I know of, so let's see what we got. The first one will be secure cards. You're gonna find these type of cards from any major bank or even your local credit union. So the way these cards work is by depositing a certain amount of money into an account, and then that amount will be used as your credit limit. So for instance, if you were to deposit $500, you would have a $500 credit limit. That $500 is essentially being locked away and used as a collateral in case you default on your account. Or it may be released back to you anywhere between 6 months to a year if you show the lender that you are a responsible credit card user. Currently, Yendo does not have a graduation feature, meaning that if you are a good customer, they will not release the title back to you and give you an unsecured line of credit. So that's one drawback. However, they do plan on having this program in the future. Now with secured credit cards, they typically report to all 3 major credit bureaus as well, while Yendo only reports to 2. Also, secured credit cards can come with or without an annual fee. There are plenty of them out there that do not have any annual fees, but some do. Yendo does have an annual fee of $40, but it is waived for the first year. Yendo, however, provides you access to meaningful credit limits without the need of locking up your cash like a normal secure card. Now let's talk about how does this compare to title loans. Now I already touched on this a little bit early in the video, but with a title loan, there are typically very high interest rates, sometimes in the hundreds of percentage APR, and it's kind of like a loan shark. If you were to take out a loan for $2,000 and you have an interest rate of 300%, you can end up paying over $4,000 in interest. Of course, this all depends on the terms of that particular loan. Now, on the other hand, Yendo does have interest rates that are much lower than title loans, and it can be used as a revolving line of credit rather than just a loan. Once you pay off a title loan, you would just get your title back and have to repeat the process again if you need money again. On the other hand, with Yendo, they still hold on to the title and you can still use this credit line that is still available to you whenever you want. So when it's all said and done, I think Yendo is a pretty great product, especially if you have bad to no credit, looking to build credit, or just looking to borrow some money, but you have a car title in exchange rather than cash. And especially if you are considering a title loan or payday loan, Yendo is a much better option for you. Being able to access up to $10,000 can help many people out there who are in a pinch. If you guys are interested, I do have an affiliate link down in the description. If you guys want to learn more things about credit and personal finance, come check out these videos over here.